All right, if you're a leader at a bank or credit union, you've probably felt it. The ground is definitely shifting under our feet. The strategies that you've been relying on for years, they're starting to break down. So today, we're going to tear up that old deposit playbook and really dig into the new forces that are reshaping the entire game of funding. Let's get right into it. This quote just says it all, doesn't it? For the better part of a decade, deposits they just showed up. That era is completely over. And this isn't some future prediction. This is what's happening right now. The game has changed, and honestly, the stakes have never been higher. So let's start with the absolute core of the problem. Those fundamental assumptions that we've all been operating under for years, they're broken. What worked yesterday has, believe it or not, become a liability today. We all got used to thinking of deposits as this stable, passive, almost inert part of the balance sheet. Well, that reality has been completely shattered. The challenge today isn't that there's a scarcity of money out there, not at all. The real challenge is that for the first time in a very long time, we have to actually fight for every single dollar. And look, this new competition, it isn't just the bank across the street anymore. There's a massive, and I mean massive, pool of capital that's been hiding in plain sight, and it's casting a huge shadow over the entire industry. Just take a second and let that number sink in. $7.3 trillion. As of late 2025, that's the amount of cash just sitting in money market funds. This is the new scale of the capital you're up against. It's staggering. So what are we talking about here? What are you really up against? Money market funds. They've basically become a primary competitor for your deposits, and they're doing it by offering the two things customers are craving most right now: really attractive yields and super high liquidity. Now, here's a really key detail. This money isn't technically outside the banking system, but what it does do is create this immense pressure. It's like a giant magnet just pulling liquidity away from your balance sheet and right toward these higher yielding alternatives. The whole competitive landscape has just exploded. You're not just fighting other banks, you're fighting US Treasuries, you're fighting high-yield fintech accounts, and you're fighting these incredibly sophisticated digital products from the major players like JP Morgan's Money. And we need to be crystal clear about what we're up against here. It is so easy to just dismiss something like Money as, just another retail app, but it's not. It's a tokenized, institutional-grade money market fund built for qualified investors. This isn't a play for checking accounts. It's a sophisticated weapon designed to capture high-value corporate and institutional liquidity. So, as if that brand new competition wasn't enough, we're all trying to operate in one of the most complex macro environments in recent memory. And it's creating a real catch-22 when it comes to any kind of strategic planning. What's so interesting about this is the tightrope the Fed is walking. On one side, you've got this rising unemployment trend in 2024, which is screaming lower rates, stimulate growth. But on the other side, you've got this stubborn inflation, still hanging around near 3%, which is saying, hold on, don't repeat the mistakes of the past. They're in a tough spot. And here's the crucial point for everyone watching. You don't set these policies, but you are 100% responsible for navigating the fallout. Your deposit strategy just can't be a bet on what the Fed might do next. It has to work. Period, no matter which way they decide to go. Now, this might sound a little dramatic, maybe an overstatement, but in today's environment, it is absolutely directionally true. That risk-free rate offered by the government has now become the baseline, the benchmark that your customers are measuring you against every single day. So, to put it a little more precisely, the yields you see on treasuries and money market funds have basically set a new reference hurdle. Think of it as a performance benchmark that every single one of your deposit products, I'm talking everything from checking to CDs, has to clear just to even be in the conversation. Okay, on to the third major disruption, and this one might be the biggest of them all. It's not a new competitor, it's not a policy change, it's your own customer, and they've just been handed a superpower. Your depositors are just not passive rate takers anymore. They are quickly becoming AI-powered negotiators. They've got tools right in their pocket that can scan the entire market in seconds, arming them with perfect information to demand the absolute best deal. And this really just illustrates that new journey perfectly. It all starts with a simple question to an AI. Then the AI does all the heavy lifting, instantly turning a regular customer into an expert negotiator. And with modern payment rails, the friction to actually move those funds, it's getting closer and closer to zero. Now, let's be totally clear about this. These AI tools aren't regulated financial advisors, at least not yet. But you know what? It doesn't really matter, because what they are is the most powerful comparison engine ever created. They're an accelerant for rate transparency and shopping behavior on a scale that we have just never seen before. Someone asked this question recently, and wow, it really gets to the heart of the matter, doesn't it? When you have perfect information and basically zero friction, does the whole concept of a stable core deposit even exist anymore? Of course, saying all money is hot is an overstatement. Relationships, loyalty, all those bundled services, they still matter a lot. But the idea is directionally correct. Technology has made a much, much larger portion of your deposit base more sensitive to rates. The money might not be hot, but it's definitely a lot warmer than it's ever been. Okay, so we've laid out the threats, and I get it. It can feel a little overwhelming, but there is a clear path forward. So let's talk about how you can start competing intelligently in this new world. The answer can't be just another race to the bottom rate war. That's a game that most institutions just can't win in the long run. The solution is a fundamental shift in strategy. It's not about finding money anymore. It's about how intelligently you compete for it. And this requires some new mandates. First, you have to embrace technology to really understand your customers. You've got to reimagine your products to deliver value that goes way beyond just the interest rate. You have to empower your frontline teams with real data, turning them into true advisors. And finally, you have to build systems that are agile enough to respond in hours, not drag on for weeks. So, we'll just leave you with this one question. Take it to your next strategy session. Your customers, they're now armed with an AI secret weapon. What's yours?